Olivier and I were just speaking. He sends his huge regrets. There is a very, very important ECOFIN conference this weekend, and he has been called to prepare for that. So it shows just what an important and highly sensitive position he holds. And he is going to address us for about 10 minutes. There's going to be, unfortunately, no opportunity for interaction. But I know and I hope and I believe that Olivier is using this as a little bit of a call for evidence and holding the Commission to account for progress on the big issues that are on our minds. So what is the progress on Capital Markets Union? We're all looking for it. We all want to see evidence. What is the progress in terms of pensions? And then I know that Olivier will want to talk maybe a little bit about his views on how regulation is supporting financial stability. He's also very intrigued by the role that fintech can play in all of our markets, and he may in his 10 minutes have a chance to comment on that. But Olivier, over to you, and a huge thank you for being with us.
Well, thank you very much, Michael. As you said, I'd first like to present my apologies. I think you're over 500 in the room, representing 19 trillion of assets under management, if I've been well informed. So I would have been delighted to be with you. But as Michael said, we have a very important ECOFIN next week, where we will discuss the deepening of the banking union. And this is prepared by an EFC meeting. The EFC is the meeting of the head of central banks and the head of treasuries, where I represent the Commission. And that meeting starts tomorrow in Helsinki. And we need to prepare it with the Commissioner, Vice President Dombrovskis, etc., which prevented me from being in Berlin today, but I deeply regret it. So, the questions you put, Michael, are extremely important and extremely topical, and it's also a good timing. Only a few weeks ago, the Commission has released, at the end of April, the first report on the state of play on Capital Markets Union. You may remember that in 2015, in September 2015, so about 9 months ago, 10 months ago, we launched the Capital Markets Union project. The Capital Markets Union project, at its simplest, is about creating a genuine, real, functioning single market for capital financing in Europe. Because maybe to the surprise of, not of you, because you're specialized in this sector, but of many citizens, after over 60 years of existence of the European Union, we still don't have such an internal market for capital financing. Another big goal of Capital Markets Union is about trying to fix what I would characterize as a market failure, which is the fact that we have a huge amount of savings, probably more than ever in Europe at the moment, but these savings have a huge appetite for liquidity, at the same time as we have a need for more long-term savings in order to care for what is an aging society in Europe, but we also need to finance investment needs that are badly needed in order to boost our productivity and our growth. So this is what Capital Markets Union is about. We have announced in September an initial set of 33 measures, small, bigger. I'm happy to say that 26 are currently ongoing, in order to try to make that the intermediation happens between these savings on the one hand and these investment needs on the other, and that it happens on a cross-border basis more than it does at the moment, and sometimes it does not at all in some sectors. Maybe I'm not intending to go across the 26. Maybe a couple of key measures in my view. We presented, the very first measure was presented was about reviving securitization in Europe with a high-quality securitization standards, which probably will first benefit to mortgages, because this is the simplest thing to securitize. We have long statistical data series. The rates of default are very well known. So when we have the standards ready, I think this is what will first start. But we hope very much through a number of other measures in time be able to securitize, for example, SME loans in order to increase the amount of financing going to the SMEs. That postulates that we are able to do a number of things, like, for example, having platforms displaying a reliable and standardized, simple credit information about SMEs in Europe that allows investors to do their job. We also took measures in the field of infrastructures to allow the insurance industry to invest more in infrastructures. The European Commission, Lord Hill, has taken its responsibilities by deciding to cut by 40% roughly the calibration in Solvency II that was proposed by EIOPA. And we very much hope that that will be effective in terms of boosting infrastructure investment by insurance companies. We are currently requesting the opinion of EIOPA on the investment into infrastructure corporates, and I hope we will be able to have the advice of EIOPA as soon as possible in order for us to be able to define an appropriate calibration. And maybe finally, on this broad topic, Lord Hill is very keen to work on the strengthening of the single market for consumer financial services. Over the last 5 years, little has been done about consumers protection, consumers information. And at the moment, less than 3% of consumer in financial services purchase across borders in Europe. We want to increase this and boost the market in that respect as well. There are a number of key milestones ahead of us. We intend to launch a proposal to upgrade the EU VK framework in the summer. It works, but it doesn't work as much as we would like it to work. And a number of you have made us aware of things that needed to be fixed in the framework for it to be more easy to use and more effective and less technocratic and administrative. So we're very much keen to undertake this. We will also publish a call for expression of interest by private asset managers in managing a fund of funds investing in EU venture capital with some public money coming from the research budget of the EU. We will start work through a consultation on strengthening cross-border distribution of investment funds as well, and also on the work program before the end of this year. We have an initiative to reform insolvency law. That is quite challenging. Insolvency law is at the core of civil law in member states, so they're quite touchy with us trying to interfere into this. But we do believe insolvency laws in Europe are far too destructive of value, and we're very keen to explore with member states the possibility to complement their national insolvency laws with a European module, let's call it that way, that I would characterize as a sort of second chance Article 11-like provision to complement national insolvency laws. So as you see, Michael, quite a lot to do in the field of CMU. You talked about pension, and of course I talked a bit about pension as well already, but there is a project that we are very, very keen conducting, and this is the personal pension project. If we want to have more long-term investment, if you want to channel more of the savings of citizens towards long-term ends in order to care for their old age, we need to be able to offer them pan-European products that works, have a good return, are professional. That is the reason why we are currently completing the review of the IOP framework for pension funds. That is also the reason why we want to complement it, if it proves useful, by a pan-European personal pension project. We want to have a product available on the market that would serve the purpose of somebody that, say, works in Italy and then goes to work in France and wants to take this product from a UK company and finally will retire in Greece. And we want the product to be structured in a way that from the point of view of the end consumer, doesn't matter where the company that sells the product is located, doesn't matter where the underlying assets are, and doesn't matter where the consumer is located, and it can move and it works. And we think that would be great, and that would provide a great opportunity for Europe. Lastly, you invited me to say a word about fintechs. It is a very important topic, and we are taking it very seriously. Lord Hill has decided a month and a half ago to create a task force within the GFISMA, which put together people from the various directorates in FISMA, because the only thing that linked fintechs together is the tech. But in FinStem, it's many, many things. I mean, it may be blockchains, it may be a number of other things. It may have to do with insurance, it may have to do with banking, it may have to do with markets, with loan originating funds, what have you. So it touches upon all the areas in financial services and requires expertise, technical expertise in all these areas. And which is why we have put together a network of people with the various skills that are necessary to embrace the fintech issue globally. Secondly, as I said, there is a very, very strong tech aspect of it, which is why we are expanding that task force to our colleagues at DG Connect, so the tech part of the Commission. The goal is to keep fintech under review, see whether there is a need for regulation or not, and if yes, when and what type of regulation. I'm not too keen to regulate everything at every moment. I mean, I believe regulations are very often straitjacket effects, and that's not desirable. But fintech people themselves ask us for regulation sometime, what I would call enabling regulation. In other words, a regulation that allows them to grow outside of the border of the member states in which they were born. And this type of regulation that opens the single market for fintechs when they are big enough to be willing to grow across border is probably something we should consider. So as you see, Michael, quite a lot to do. A last word simply to answer your initial question. Yes, we have launched a call for evidence. I think that was probably one of the best things we've ever done. The results we are currently dealing with, some of them are very interesting. Some of them are less. In some cases, we called for evidence and we got claims, not much evidence. In some cases, people refight the old battle that they lost at the time of the initial regulation. But in many, many cases, we have obtained very, very good insights and quite a number of evidence for things that need to be fixed for the regulation or the various pieces of regulation to work better with each other in the interest of market functioning and the financing of the economy. So that we will do. We will report probably in July or in September, it's not yet clear, about the results and what we intend to do with it. But in a way, the call for evidence spirit survives the exercise. And really, I would invite each of you, if you spot an inconsistency between two regulations that make it impossible to make business in a sensible way, if you spot an area in which you believe the administrative burden goes far above what is necessary to safeguard market stability and consumers' interest, please address us. Write to me, write to my colleagues, send me an email. We're very keen to hear your views. I don't promise we will agree with you, but we will certainly listen to you, consider it, dig around your claims to see whether in your claims there are also some issues that we can substantiate by the evidence, and if yes, we will act. Thank you very much, Michael, and I wish all of you a very successful panel and a very successful end of conference.
Olivier, thank you very much. I hope you can hear the applause from this audience when you get it. And you will be flooded with ideas and suggestions for better enablement of cross-border investing. And I think ringing in everyone's memory will be the idea, I think you said an Italian who moves to work in France, whose funds are managed in the UK, who retires in Greece. What a happy vision. Olivier, thank you very much indeed. Much, much appreciated.
Thank you. Thank you.
So with that, we're now going to discuss some of the things that Olivier discussed, and I'm going to invite our very distinguished panel. Just to remind everyone, in case I didn't at the beginning, we are live streaming this session. So we're making sure that this is enabled for people who are digitally enabled in their office, in their home, wherever they are in the world. But welcome to the stage, please, give your appreciation to Roderick Munsters, who has just joined as the global CEO of EDMOND Rothschild. Roderick, come and join us, please. Funered, who's the Director of Public Policy at FIDELITY and previously held a number of very senior positions in the Swedish government. Please welcome Andrea Beltrati, who is the chairman of Horizon Capital. Hopefully you need no reminder at all that this is the investment management arm of Intesa Sanpaolo. And last but not least, the chief executive of the European Investment Fund, Pierluigi Gilibert, who is at the forefront of Capital Markets Union and enabling small and medium-sized enterprise access to securitization, to venture capital, to crowdfunding, to peer-to-peer lending. So we have a fascinating panel for you. Maybe, Pierluigi, you heard some comments about securitization there. I know that EIF has been involved in some of the simple, standard, transparent structures to date. But perhaps starting with you, some responses to the encouragement that the Commission is giving.
Yes, we see this market coming back gradually. It has suffered from the stigma of a subprime crisis in the US, and probably for the wrong reasons. All the securitization that we have been invested in over the last 10 years or so have all performed very well. I'm talking about securitization with the underlying is a portfolio of SMEs. They all did very well. We have no default rates of any kind. Now we see that gradually the market is coming back, supported also by the initiative of the Commission, the Capital Market Union, and in particular the newer concept of simple, transparent and standardized securitization, which are meant to support the market, but providing investors with products that are better understandable, the complex ones that were so unsuccessfully marketed in the past. We have done recently a number of this type of transaction in Italy, in Germany, in France, and we have see a very nice response from the market. Let me also maybe recall a recent deal we did in the UK with Funding Circle, which is the first securitization of a portfolio of loans originated by a peer-to-peer lending platform, which is a very first in this space, and it is a kind of sector that we see growing very fast, still counting about 1% of total SME lending in Europe, but very high growth rate. So this is also something that under the Capital Market Union is a conduit for new loans to SME, which we are looking at increasingly with increasing interest.
So the European Investment Fund is convinced that Capital Markets Union is coming to life and does offer real practical solutions.
Yeah, we see the Capital Market Union as the space where we are naturally in. Our business is 50% venture capital private equity, always in support of SMEs, and we are probably the main player in this space in Europe. We have a portfolio about 12 billion venture capital funds, and our commitment this year will be over 3 billion. We see a market that is coming back from the crisis originated at the time of the Lehman default, and is a market which is maturing. We see not only in terms of volumes, we see average fund size that used to be below 100 million and now is easily double. We see teams that are sourced and based in different countries in Europe, so no longer localized venture capital managers, but really pan-European cross-borders. And we see also secondary market in these assets developing, which is important because institutional investors have traditionally stayed away from this asset class as being illiquid, very long term. Now there is some degree of liquidity. So overall we see both generalist funds and funds dedicated to particular teams or sectors, such as robotics, big data, Internet of Things. So if you want to take an exposure on innovative startups or mid-caps in Europe, this is the place to be. And you don't take any exposure to banks. By the way, all these sort of startups are not bankable. They are not going to ask a loan from a bank. They come to business angel first, and then to venture capital and private equity fund managers later on. And this is the way you get exposure to these high flyer startups, which, by the way, don't get quoted very easily. They stay private for much longer than in the past.
Thank you, Pierluigi. Urban, from your position at Fidelity and having been an insider within the European Union financial market infrastructure, indeed representing the Swedish dossiers on much of the regulation, how do you see the opportunities for a firm like Fidelity to passport and manufacture throughout Europe and distribute throughout Europe?
Well, I think, while there are still obstacles, as we all know, when it comes to distribution of funds and provision of financial services cross-border, I think the approach by the present Commission, as represented by Olivier here, and Olivier being in a very good position also to kind of work on this, as he held a very senior position also in Barnier's cabinet. I think it's really interesting what they are doing. There are still lots of obstacles, but while I think the previous Commission revolutionized our area for a number of reasons, we are now talking more about reform, and I think also an honest and good dialogue with industry, and the fact that some 300 responses have been filed to the call for evidence, meaning that they have to sift through tens of thousands of pages now during the spring and summer. I think that shows that also from our side, from the industry, we are seriously taking up this baton to have a dialogue with the Commission. And what's so important is, of course, that they do not make this a one-off exercise. And I think they have also indicated that they will have to come back to this over the years to come, because we all know that there are a number of let's say, complicated acts and legislations that are still to enter into force, MiFID II, PRIPS, etc., where we do not know, well, they haven't even been implemented yet, so we don't know the outcome, they haven't been tested, and it's really important that they continue with this dialogue. And I think also we as an industry should, I mean, having looked at a number of these responses, I think he's actually right that a few of these responses just reiterate positions that member states, industry representatives, etc., had already during the negotiations. But I think on the other hand, many of the rules that we see today were never assessed, they were never analyzed, and it may be a secret to most of you, but actually in the Council over those 5 years when we adopted some 40 legislative acts, we didn't always know what we were doing. We had to kind of move forward, and we may have made some mistakes on the way.
Thank you, Urban. Andrea, how are you seeing at Horizon the opportunity that is a pan-European personal pension?
We think it's a great opportunity for the industry in general. Clearly, there are benefits for the European economy overall, because if we are able to increase the share of investment towards pensions, it also means we are increasing the share of investment with a long-run horizon that will be very helpful from the point of view of market stabilization and also financial education. It will be a chance for the industry to better show to people what we do and the way we contribute to economic growth. In EFAMA, we have a pensions working group, and we've been interacting very closely with the EC and with the EIOPA on this PPP project. So I was very happy to hear Olivier saying that it is a crucial project for them as well. And we are trying to better understand the appetite of international asset managers for actually offering this product in the short run. So we've launched a survey that was completed a couple of weeks ago. So we have very early results that we are elaborating and that we will present to the EC in a forthcoming meeting. But I would say the results are encouraging. Many asset managers say they are interested in seriously considering the possibility of the PPP. Clearly, we realize that there are challenges that have to do exactly with the example that was made by Olivier, so the Italian person working in Germany and then retiring in Greece and using a UK fund. The challenge is we would have to come up with a product that can be portable, that is the true new element in the PPP. And of course, having a large number of countries, it must be portable across a large number of countries. And the true issues are not so much of financial technology, because we do have financial technology for investing for the long run. The true issues are actually operationals, custody, position keeping, and so on. And so we will think hard about those. I think it will be an opportunity not only for the asset management industry, but also for other industries. And we are planning to have an offsite in October, 1 or 2 days, just dedicated to the PPP, to better understand the sort of value chain going from the final customer to the asset manager, involving so many other participants.
And when you have this offsite, is this a Horizon offsite and a farmer offsite?
No,
are you inviting your colleagues?
It's clearly an EFAMA offsite.
It's an EFAMA offsite.
That's what I mentioned through the pensions working group at EFAMA.
Right.
That has been following very closely the project since the very beginning.
And I know somewhere out in the audience, Peter de Proft will be actively promoting that to all of the members. And then, Andrea, you are a visiting professor at a number of universities around the world, so you're mobilizing a lot of student research to support this as well, from the London School of Economics, from Stanford, from the University of Melbourne.
That was in the past, unfortunately.
Bocconi, yeah.
Yes.
Good.
Thank you.
Roderick, from your new position, you've moved from Rotterdam and Robeco to Paris and Edmond de Rothschild. You're global. How much of your attention are you giving to the European opportunity?
Well, I'd love to have a portable private pension for sure.
Yeah.
Eh? So I'm sign me up for that. I'm spending quite some time on these issues, although I must say that if you listen to the Guersent, what he states, that I think one of the things we sometimes forget is how much effort and thought the people in Brussels give to these processes that will help us run better business for our clients. And whereas, of course, it seems a bit de rigueur to bash Brussels, I think we should applaud what these guys are doing, because I think it's very well designed, it's going to help us, and our successors 5-10 years from now will I think, have the benefit of that. If I look at the numerous efforts, one of the things that strikes me in Europe, though, still, is that it seems that there's some competing perspectives that people use. So on one hand, these three supervisory authorities that take a European view want markets to be safer, taxpayer money not to be used to the rescue when the next financial crisis happens. I hope it's many years from now. And on the other hand, people want investors to spend money and to put it at risk to bring returns. So either we want things to be safe or we want them to be risky. I'm more in the risky camp because that brings growth, it brings opportunities, but you cannot have both at the same time. And if you combine that to rates being zero, I think we're in a very, very difficult position that asks for clear choices to be made.
Well, one of the subjects that was touched on in Olivier's presentation was the subject of infrastructure. How are each one of your firms thinking about investment in infrastructure? Roderick, maybe.
Yeah, so at ROTHSCHILD we have two funds running. We see a great interest for that from institutional investors. You can get yourself, it's typically BBB rated, some a bit below, a bit above. You can get interesting spreads above LIBOR, but also it's relatively stable. You benefit from economic growth so that your position as a creditor becomes stronger. And it has helped a lot that Solvency II regulation on infrastructure is going to be relaxed, it seems. Yeah. So there, people are making choices. So I think it makes a lot of sense. And if you travel Europe, like I do, you do see, I think, the need of infrastructure investments. So also as a utilizer of that.
And Urban, at Fidelity and your role in public policy and your inside experience, what are the key issues that you would like colleagues in the audience here at FundForum to join you in advocating for with regard to Capital Markets Union? Is there anything that makes sense from a Fidelity point of view that isn't getting the momentum it needs?
Well, I think there are a couple of areas. As we live in the world of financial services, we sometimes forget that there is a world outside as well. And there are actually a number of really interesting initiatives by the Commission in other DGs. And I heard that Olivier referred to this new cooperation between DG FISMA and DG Connect, which is then the digital kind of directorate of the Commission. I look around here and see that we have a few digital natives here who were born in the 1980s and later, but we have quite a few digital immigrants as well, like myself, who actually lived in and can recall a world where we did not have the internet. And I think even if we, as my children tell me, we try hard, but we will always kind of retain a slight accent in a way when it comes to not being digital natives. And I think the fact that they are actually working together, it's sad to say, but actually one of the, from a practical point of view, big wins that we could see in the Council during the negotiations of all of these acts, what that we managed, I think almost everywhere, to get out the word written before the word information in a number of proposals that came out of the Commission. But the mere fact that we have to discuss this, that it should be just, we have to provide information, clear information, and not clear written information, just says quite a bit. So I think this cooperation is really good. We have to make sure that we can going forward, do everything digital, and that has to be part of this review as well.
Excellent. And Pierluigi, were you encouraged by everything you were hearing? Are you getting the support from all of your shareholder countries, your own substantially by the European Commission, but also you have some private sector involvement? I think Barclays Bank, Santander are very much investors in EIF as well.
All I can say is that all our lines of products are developing very strongly. There is a lot of market interest in this alternative form of finance that complement the typical channel of funding to the real economy in Europe, which is the banking system. Banking system in Europe, we know, is held back by regulations, lack of capital, non-performing loans. So there is a part of the real economy, meaning especially SMEs as far as I'm concerned, but also infrastructure projects that are left unattended. You were mentioning infrastructure. When I work in the EIB. The EIB is a main provider of infrastructure funding in Europe. And we had 2-3 years ago the project bond initiatives. And project bond is part of the capital market union as well. And the idea was to launch a pilot whereby a tranche of mezzanine funding was inserted in the capital structure of an SPV supporting an infrastructure just above equity, so that to upgrade the senior debt to investable levels, at least single A, and then sell these loans, transform into bonds to institutional investors, including pension funds, insurance companies. So we went through all this, and we had about 6 or 7 projects in energy and transportation in several member states, Spain, Benelux, Italy, UK. Now the funds have substantially coming from the Commission have run out, and we are now taking stocks of this initiative, but clearly this is something we would like to come back to, because I do believe it's an asset class that could be of interest to institutional investors.
And Andrea, wearing your farmer hat, is there anything that you want to invite your colleagues to join you on in terms of moving our industry forwards in Europe?
Well, of course, I think everybody already thinks a lot about regulation and about the need to be helpful to the Commission and to the regulators in general to understand the unintended consequences of regulation. And I think we have several, not only in the asset management industry, but also in banking. So that's clearly part of the issue. Another part of the issue is perhaps to move together and help society to better understand what we do and the way we contribute to the economic growth. And from this point of view as well, I think also from the point of view of financial education, CMU is a big opportunity for us.
Good. I think this panel is out of time. Thank you for those of you who've been watching the live streaming. I know we've recorded this. I know each member of the panel welcomes the opportunity to follow up or take further questions, and I know FundForum will arrange for that to happen. So join me, please, in thanking this panel, but also remember the parting words that Olivier gave. If you see things that don't make sense, if you see ways in which cross-border can be better enabled, if you see inefficiencies or inconsistencies in regulation, we have an open invitation from the Commission to be in touch, and I think that is phenomenally powerful. So let's do what we promised to do, which is flood the mailbox and get the meetings and make the change and build the Capital Markets Union. Thank you all very much indeed.